Welcome to my channel. I'm Scott, and in this video we're going to talk about Uranium Royalty Corp. And this company is pre-revenue, so let's just go through their presentation because it's almost impossible to value a company that's pre-revenue. I pulled this little blurb from their website. They gain exposure to uranium prices by making investments in uranium through royalties, streams, debt and equity in uranium companies, and purchasing physical uranium. They do trade on the NASDAQ, ticker UROY, and if you live in Canada, they trade on the TSX Venture, URC. This company is the first and only pure-play uranium royalty company. There are many gold royalty companies, but URC is the first to successfully apply the royalty model to uranium. They have a solid balance sheet with liquid assets of 131 million Canadian dollars. This company owns physical uranium through CGN Global and its 3.8% stake in ticker YCA. That's on the London Stock Exchange. Yellowcake has a market cap of 778 million pounds. And look at that PE, it's below 4. Their portfolio includes 15 uranium projects. On the next slide, we'll look at their management team and board. They have tons of experience. Scott Melby is their president and CEO. He has 37 years of experience in uranium. Their chief technical officer has 20 years of experience with Cameco. Of the 8 public uranium companies in the US, Cameco is the largest by far at 11.5 billion market cap. Uranium Royalty is 7th at 393 million. Their chairman is the founder and CEO of Uranium Energy Corp. Their market cap is 1.3 billion. I did a video on them in the past. Uranium prices are really low now. Back in 2007, they were $138 per pound. They were as low as $20 a pound in 2016. They're around $50 today, which is lower than 2011. That's when the Fukushima event occurred. The Fukushima nuclear disaster occurred in Japan. It was triggered by an earthquake and tsunami. It was the most severe nuclear accident since Chernobyl. They have 93 million shares outstanding, 18 million warrants, and 800,000 options. So fully diluted is 111 million shares. Here are some of the big shareholders: Uranium Energy Corp, Rick Rule, Mega Uranium, and a bunch more. Their stock price on the NASDAQ is $433, on the TSX Venture is $537. They have a really diversified portfolio. They're in multiple countries. They work with a lot of different companies. I'll show you that in the next slide. Here are some of the companies they have a relationship with: UEC, Cameco, Rio Tinto. We talked about Yellowcake earlier, Energy Fuels, and many more. Here's a visual of the locations of their projects: Africa, Michigan. They have a bunch in Saskatchewan, a little bit in Montana, Wyoming, South Dakota, Colorado, New Mexico, Arizona. This quadrant right here is Saskatchewan, just a little closer view. If it has a triangle, it's early exploration. So here's a triangle, triangle. If it has a star, it's in production. Here's a star right here at Cigar Lake. A square means it's in development. It looks like they have 2 squares at Slick Rock and Anderson. A pentagon is advanced. Here's a pentagon. There's 2 pentagons right here, 3 pentagons right here, and 1 in Michigan. And if it's a circle, that means production has been idled. So here's a circle in Africa. Here's a circle in Lance. Here's a circle in Blind River in Ontario. And their geological basin is in Montana, Wyoming, and Saskatchewan. They own 3.8% of Yellowcake. Yellowcake has an agreement with the largest uranium producer. This agreement allows Yellowcake to purchase $1.1 billion of uranium over the next 10 years. And their current uranium holdings are 16 million pounds. And if this company can get to 10% ownership of Yellowcake, then they can nominate one of their directors to the board of that company. URC increased their inventory to 1.5 million pounds of uranium, and they paid only $42 a pound. And there's a decent chance uranium can double or triple over the next few years. And that's being stored at Cameco's Blind River facility in Ontario. They recently entered into a supply agreement with CGN, and that was to purchase 500,000 pounds at $48 per pound. They should receive that between 2023 and 2025. Here's a list of 3 of their Saskatchewan locations. And the proven reserves are 17 million pounds, 95 million, and 329 million. Rough Rider is in development, Cigar Lake is in production, and MacArthur has been idled. Russell Lake in Saskatchewan is in early exploration. Drawn Lake, also in Saskatchewan, is in development. Dawn Lake has 18 million pounds of indicated and 1 million of inferred. Indicated is more probable than inferred. They have a 9% share of MacArthur River. Cameco projected 5 million pounds of production this year and 15 million pounds per year by 2024. Cameco owns 70% of this project. They have a 3.7% share in Cigar Lake and 20% NPI. So they may get 20% of the net profits of this location. NPI is usually used for agreements in natural resources. It's when a company leases out a property to another so that other company can do the development and production. That's measured 27,000 kilotons, indicated 313,000, and inferred 186,000. The Wyoming property is idled, South Dakota is in development, New Mexico is in development, and Wyoming is in development. Michelin in Canada is in development. The African location in Namibia, that's idled. New Mexico is in development, Arizona in development, Colorado is in advanced stage, and Arizona is advanced. When you compare this company to physical uranium, the uranium ETF, and other operating companies, they check all the boxes. They have exposure to the price. Their operating costs are fixed since they're mainly just collecting royalty payments. No development or capital costs. They receive the upside from exploration, but they don't have to worry about all the expenses. And they have a really diversified portfolio, as we've seen. It's a lot easier to scale a royalty company than a regular mining company. Their main focus is acquiring existing royalties. They do plan to buy physical uranium and other uranium interests. The company added this news story to their website on March 31st. They entered into a 10-year supply agreement to acquire $10 million of physical uranium at $29 per pound. I'm not sure how they got it for so low. That's a great deal. And the great thing about nuclear energy, it's clean, safe, and reliable. So it's a great addition to wind and solar energy. If gas prices continue rising, then demand for uranium will increase. Nuclear energy is so clean, it gives out hardly any emissions. It's better than wind, it's better than hydropower, it's a lot better than solar PV, and forget about biomass, gas, and coal. They give off tons of emissions. And there's hardly any deaths connected to nuclear. That's another reason we're trying to get away from coal and oil. And the cost for nuclear is a lot better than fossil fuels and even other low carbon options. Uranium power plants are popping up all over the world. There are 14 countries in Europe that have them. Europe has 130 reactors in operation, 4 in construction, and 24 are planned. Back in 1983, only about 50% of people were comfortable with nuclear energy. And now it's way up to 76% today. Not only is it safer and better for the environment, it also adds $60 billion to the country's GDP because it will save us 6% on our electricity bills. The nuclear market is not small anymore. It's getting bigger and bigger every day. 441 reactors worldwide, 51 under construction. Lots of big countries trying to increase their market share in uranium. China, India, that country plans to add 21 nuclear reactors by 2031. United Arab Emirates, the UK, France, Russia, Japan, and of course the US. The demand for uranium far outpaces the supply. The projected demand this year is 200 million pounds against production of 136 million. Simple economics tell us when demand is higher than supply, price goes up. That's a gap of 64 million pounds, and the projection is for that gap to grow to 451 million pounds by 2032. This green line is the uranium requirements, and production always falls below the green line. If we don't find more uranium, it's going to get depleted, and the supply will decrease. The reason other companies aren't that aggressive with growing their uranium portfolio is because the price is too low. It's inevitable the price will rise, especially if demand outpaces supply. And when prices do rise, companies like this that have a lot of reserves are going to make a windfall of money. The bipartisan support for nuclear energy is at an all-time high. Both Democrats and Republicans want to grow that sector. The US Senate passed a $6 billion nuclear credit program. In order for us to get the carbon pollution-free electricity by 2035, we're going to need all the help we can get. We can't just rely on wind and solar and stuff like that. Nuclear energy is going to have to play a bigger part. We also have a uranium reserve budget of $1.5 billion over the next 10 years. The $6 billion was for all nuclear energy. The $1.5 billion is only for uranium. Another thing that may drive prices is we're cutting off imports from Russia. The latest list of uranium production by country is from 2019. Kazakhstan is the largest, then Canada, Australia. Russia is the sixth largest. The US is not even in the top 10. You can buy uranium on Amazon. Uranium is not dangerous. It can be risky by ingesting uranium, but touching it won't really affect you. So to summarize, this is the first pure play uranium royalty company. Their portfolio covers multiple jurisdictions. Their team has a ton of experience in this market. As we've seen on these charts, nuclear energy is gaining more and more acceptance, and the demand is growing each year. So if you're looking for uranium exposure, this company may be your best choice. So let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.